After a tough few years with the global financial crisis, the International Monetary Fund says the worldwide economic outlook is now strengthening. Its latest assessment of world economic prospects shows that emerging economies continue to outstrip developed countries, with China and India leading the way, and the US and Australia having their forecasts revised down. But the IMF says soaring oil prices and inflation in emerging economies pose new risks to global recovery. Emily Stewart reports.
The world economy seems to be getting back on track.
For the world economy, for both 2011 and 2012, we expect the growth rate to be 4.5%, a fairly high growth rate.
But the IMF is forecasting a big difference in growth rates for the developed and emerging economies. Developing countries are forecast to grow by 6.5%, but advanced economies are expected to grow by just 2.5% for each of the next 2 years. The world's biggest economy, the US, is expected to expand by 2.8% this year, down from its January forecast of 3%. The IMF says developed countries need to continue with the implementation of fiscal consolidation plans.
To do so and to maintain growth, they need to rely on increased external demand. Symmetrically, emerging market countries must rely less on external demand and more on domestic demand.
The IMF has also cut down Australia's economic growth outlook for 2011 from 3.5% to 3% due to the impact of the extensive summer floods in key mining and agricultural regions. The NAB is predicting even lower growth of 2.5%, but says slow growth early on will be offset later in the year.
What you have is a combination of very high commodity prices that essentially flow through in terms of wealth to essentially all Australians after about 12 months. You have very large increases in investment in mining, and you essentially have the rebuild that's going on essentially in Queensland.
But the longer-term story for Australia is still very strong, and we will certainly produce an outcome which is as good, if not better, than just about every other advanced economy. So we've got this challenge, if you like, short-term softness, but long-term strength.
And recent events in Japan are expected to have a minimal impact on Australia's and the global economy. The IMF is more concerned about the high growth rates expected for China and India of around 9%.
So instead of the world worrying about who's the next country that's going to fall over, I think what we're seeing is people are saying, well, hang on, we're more worried about inflation now.
The IMF says inflationary pressures are likely to build as growing production comes up against capacity constraints. Fears have also turned to commodity prices, which have increased more than expected because of strong demand and a number of supply shocks. But economists say high oil prices would only take about 0.3% off global growth if they continue at the current rate.
You're not really talking about sufficiently negative outcomes from oil to basically derail this recovery process.
And the IMF wouldn't be drawn on whether measures to stabilise the struggling economies of Ireland, Greece and Portugal have been successful, saying it was still too early to tell.